The primary objective of investments related to stocks, mutual funds, and other options often revolves around surpassing benchmark indices to achieve favorable returns. Among benchmark indices, the Nifty 50 holds proven historical performance. Additionally, the Nifty Mid Cap and the Nifty Small Cap indices are worth considering as they represent stocks with significant growth potential in the Indian stock market. There are multi-cap PMS that encompasses the Nifty 50 stock, the mid and small cap stocks. In this video, let us review one such PMS, ASK Growth Portfolio. Welcome to holisticinvestment.in. First, let us have a look at the ASK Group. The ASK Group is a well-known financial service provider and a pioneer in the field of wealth and investment management, serving some of the richest families in India. It was founded in the year 1983 and it is renowned for its successful multifamily office, asset management, private equity and wealth consulting operation. Over the past 39 years, most of the portfolio has delivered good returns and managed to beat the index in most cases. Next, overview of ASK Growth Portfolio. It was introduced in January 2001. The minimum investment amount is Rs 50 lakhs. Buy and hold strategy with minimal churn is the idea behind ASK Growth PMS. The primary investment attribute is to deliver medium to long-term returns by acquiring growth-oriented stocks at attractive value prices, taking into account their long-term prospects. Capital preservation and capital appreciation are the two main goals of this ASK Growth Portfolio. This is achieved through long-term investments in high-quality companies with strong growth prospects. Next, we shall look at the fee structure of ASK Growth PMS. Portfolio fee 1.5% of capital invested. Profit share 20% of earned profit if profit is greater than 10%. Next, market cap and sector allocation of ASK Growth PMS. Major portion is held in large cap 70.5% of the total weight, followed by mid cap 28.5%. When we look at the sector based allocation, NBFC is in the top position with 12.9%. Retail and FMCG occupies nearly 10% each, followed by chemicals, oil and gas, consumer durables. Next, we shall look at the suitability. An ideal investor who can invest in ASK Growth PMS should have the below criteria. You should be ready to invest a minimum of Rs 50 lakhs and do not require this money for any sort of requirement so that you can be at peace. You should have a longer time horizon for investment. The longer the investment horizon, the higher the potential. If you wish to exclude top banking stocks such as HDFC Bank, ICICI Bank, Axis, SBI and Kotak from your portfolio, you may consider this PMS. A high risk appetite and a highly patient investor, and be comfortable with the ups and downs of the market and be prepared for potential losses in the short term. Trust in fund manager. Trust is important to stay committed to the investment strategy and have confidence in the manager's ability to navigate market conditions effectively. Next, we shall look at the selection methodology of stocks. The universe is scanned and only the top 500 companies based on the market capitalization are selected, subjected to the first filtration. Stage 1, profit before tax above Rs 200 crores for trailing 4 quarters. Stage 2, then the filtered companies are subjected to a rigorous filter of 25% sustained core ROC over the last few years. Stage 3, along with the stage 2, the companies are also subjected to another filter of 15% earnings growth over the next 3 to 5 years. This filters out all the naughty and underperforming companies from the picture. Stage 4, management quality is assessed through a subjective evaluation of factors such as integrity, vision, execution capabilities and the capital distribution. And the stocks are also filtered based on the earnings momentum and intrinsic values. Stage 5, finally 20 to 25 stocks are selected from the whole universe of more than 500 companies. Now let us move on to the returns part. ASK Growth Portfolio return versus benchmark return. The ASK Growth Portfolio has achieved positive trailing returns across all the time frames with a maximum of about 20% post-COVID. The overall performance of the portfolio has been strong with a cumulative return of 18.7% since its inception. Now let us compare and see how the ASK Growth portfolio has performed with its benchmark index of BSE 500 TRA. All the returns given here is as of 31st May 2023. As seen in the bar chart, the calculated ASK Growth portfolio return beats the benchmark to some extent in the longer time frame, but it has heavily underperformed the benchmark in all the medium term time frames, which doesn't abode well. Moreover, drawdowns are also greater in the ASK Growth PMS than in its benchmark index. Next, let us compare ASK Growth PMS with the Nifty 50 and the most widely recognized and influential benchmark index in the market. As expected, the PMS fares a little better when compared to the Nifty 50, that too only in the long term, and misses out in the medium term. So this PMS is underperforming both the benchmark and Nifty 50 in the last 4 to 5 year time period. The persistent underperformance raises a question: what factors may have contributed to this poor performance? This can be partially attributed to its exclusion of top banks from its portfolio. This is because many banks have experienced a significant price increase following the COVID-19 pandemic. And the portfolio's lack of exposure to these stocks may have impacted its performance. ASK Growth PMS versus actively managed mutual funds. Though each PMS is benchmarked against its own index by the fund manager itself, this comparison also gains prominence as the PMS are expected to beat the funds given their high fee and operating cost. Let us now draw a comparison with fellow actively managed multi-cap funds. When it comes to comparing mutual funds, a similar narrative unfolds. The multi-cap funds have convincingly outperformed the return of PMS, fair and square. Now let us move on to the taxation part. The returns mentioned earlier are pre-tax return, and once the capital gains is taken into account, the actual return would be lower, resulting in a lower post-tax return value. Investors should take into consideration the tax implication when assessing PMS returns, as mutual fund investors may benefit from certain tax advantage which is not available in PMS. It is crucial to recognize that dividends are added to an investor's income and subjected to taxation accordingly. Consequently, the net amount received by the investor is further reduced after accounting for these taxes. Here is our final verdict on ASK Growth PMS. It has a rich history and has established itself as one of the oldest portfolio management services in our country. The PMS has performed a little well only in the longer time frame. The alarming fact about this PMS is that it has failed to outperform both the benchmark index and the Nifty 50 over the past 5-year time period. While underperformance over a shorter time period might be tolerable, the prolonged period of underperformance spanning approximately 5 years raises eyebrows. Additionally, the PMS also falls short in comparison to actively managed multi-cap funds. When a mutual fund in a similar category is outperforming the PMS while incurring significantly lower costs, it prompts careful consideration regarding which option would be more advantageous. The lack of exposure to top banks may also be a point worth noting. If there is a significant surge in the financial sector and the banks experience a substantial growth, the PMS may underperform for a longer time period. The lack of liquidity can make PMS a lesser known choice among investors who prioritize quick access to their funds. So, in conclusion, it is advisable to look away from ASK Growth PMS and explore cost-effective and highly liquid investments such as active mutual funds, or you can search for better performing PMS. Happy investing. A detailed blog post on ASK Growth PMS is available in our website and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment Webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.